So what's in store for the markets in September? Because we had this August lull, everyone was on summer vacation, and we've got all this event risk. What does this mean for the local market?
Look, I think there's been a little bit of risk aversion after quite a strong period of risk appetite in this market, and I think obviously the same trends seem to apply where you've got weak resources, strong industrials, and I think that banks and financials look like they're starting to plateau. But I think this non-farm payrolls data is going to be quite key for last month. That's due on Friday, and I think that's also going to depict some sense of a tone for the market for the month. My sense is that you're going to see a little bit of upside, and I think I maintain a little bit more of a bullish stance looking forward for the next month.
Let's talk about some of the results out today. WHO posting a drop, 17.6% drop in full year HIPs. So you're looking at a company that, even though they've managed to increase revenue by 21%, it's still not filtering through to the bottom line, but the stock was up today.
Look, I think this is really an example of how tight the margins are in the construction sector at the moment. So if you look at the construction stocks out there, you've got to give a real strong thumbs up to Wilson Bailey for how they've fared in terms of the share price relative to some of the other construction stocks out there. So the margins aren't quite there and they're not thick. And as you mentioned earlier, 67% of their interest coming from offshore, an offshore component. I think they're quite well placed looking forward for the next year on out here. Again, I still think that this construction sector is quite shaky and those margins will probably remain thin for a while. But all in all, I think the share price responded positively to the results, and I think it's well placed for the next 2 to 3 years. But it's a patient investment, this one.
Yeah, when it comes to the resources space, we know they've been really hit. The likes of African Rainbow Minerals has been one of the stocks that has really underperformed the market, and it's fallen back again once today. It's down 2%, 144 rand. HIPs only up 2%, even though also once again revenue up by 18%. What's your view on the outlook for the company?
Look, I'm quite a big believer in African Rainbow. I think that it's well placed and it's got a semi-diversified commodity exposure that can give it some really good upside, and it can over time sort of track the likes of the Billetons and the Anglos out there. Let's be honest, the sentiment around the resources has been terrible. No one wants to own them at the moment, and if you have owned them, you wish that you didn't. So I think that, again, with commodity prices coming off the way that they have, margins are also very thin in this space. Foreigners are not interested in them, and we've also got the sentiment in the developed world as well as in China that is just not really faring for resources. It's almost like the perfect storm for resources to remain weak for a while. So yeah, I think that on the back of that result, margins are thin, but resources seem like it's going to be a patient wait and
another wait and see stock.
Yeah.
Assor, on the other hand, which is quite volatile, it was up 1.5% today. Full year HIPs up by 15.2%, record earnings coming through there. I mean, what's your view on how to play this stock specifically?
I quite like the exposure in the iron ore space that they've got, and I think that it's well positioned for some good growth. We did see iron ore prices come off quite sharply last week, and you saw the likes of something like a Kumba re-rate on the back of that. Something like an Assor has been one of the best performing resource stocks for the last 12 months, and I think a year ago it was down in the early 200s, now sitting at about 306 Rand a share. So if you've been invested in the Assor space, you've been a very happy investor for the last 12 months. Where we sit at the moment, I think resources as a sector are very dependent on the turnaround in the East and from China. And when you start to see those GDP figures start to tick up and the developed will come online, a bit of risk appetite coming back into the market, it's very well placed for some good upside. I still think that it's probably going to plateau out, maybe take a little bit of a breather around these levels, but well placed. It's a good 3-year investment from this point on.
Okay, let's just take a glance back at the month that was. Group 5, one of the top gainers, up over 16%. Mete, of course, a smaller stock, up 16%. Grindrod up there. Richemont, Woolies, new record highs, it seems, most days. What did you take out from the best performers for last month?
Look, I think drilling down into the companies that you mentioned there, one that was quite interesting was in fact Grindrod, and I think that this company has been through quite a volatile time from a shipping perspective and where it's placed at the moment. So you're investing in a business that's got very strong fundamental land-based operations with the ability to benefit on a good commodity cycle. You've seen Remgro come into the picture with Grindrod with some port expansion, and I think that they're well placed. Shipping, let's be honest, didn't really deliver any earnings to the company whatsoever. So you're buying some really good fundamental valuation, land-based businesses with an option of shipping and commodities on the other side. So that was an interesting move for the month, and I think there is some fundamental buying in the stock like that.
And any of the top losers for the month that you'd be picking up? Basil Reed, Hulamin, Invelaserve, Barloworld, any of those?
I must be honest, I was a little bit too early on Basil Reed, so I felt the pain in Basil Reed this month. But again, I think that you know, a stock like Basil Reed has been hit so hard where they are. There was a BEE transaction that took away a little bit from the earnings from a dilution perspective. So again, a little bit early for the construction sector, but in terms of fundamental value, that's one that's definitely standing out for me at the moment. And again, you know, it's a choppy month. You know, it's been a choppy month, and I think that a lot of news flow has pushed and pulled these stocks all over the place. We sat and waited for the meeting in Jacksonville, and I think
not much came of that.
And not much came of that. So yeah, I think again, you know, we've seen a little bit of a short-term sell-off. I'm bullish. Hopefully we start seeing some fundamental buying in this market.
Thank you so much for joining us as we start out the month of September. Deryck Janse van Rensburg, Portfolio Manager at BOE Stockbrokers.